Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for April. Well, it's going to be the 7th, even though I'm filming this on the 6th. It's for April 7th, 2024. And wow, we're kicking off the second quarter. It's a big one already, and we're starting to see some markets get a little bit volatile. You know, there's a lot happening this next week. I'm going to talk about everything from all the CPI inflation data that's coming out, not just in the US, but everywhere else. We got 3 central banks that are meeting. We have, the stock market continues to grind higher, and we're going to talk about how the market reacted to non-farm payroll. And don't forget that we actually do news releases out of the US at 8:30 a.m. We are covering them every single week for the last 7 years, or every single day, trading day for the last 7 years on the F.A.C.E show. So if you don't join us for the free show that we do every day, make sure you register. You can do it down below. Down below, there's a link to get registered to the F.A.C.E show. I'm going to talk about a lot of things that are happening this week, but before I do that, I've got some housekeeping. And just so you all know, you can always fast forward through this video to the different chapters to get to the points that you want to get. So I just want to remind you about that, because I know it's a long video, but we talk about so many different topics here every single week. And if you like these videos and you think they're beneficial to you, getting ready for your trading week, give us a thumbs up. Myself, the team, for putting these together every weekend for you. Even if I'm out of town, one of our team members steps in and does the week ahead videos. So give us all a thumbs up. Subscribe to the channel below. Remember, it's free to subscribe to this YouTube channel, and hit the bell notification. It'll give you a little ring every time that we upload the new video. You'll get it even before our traders that are involved, and which you should be too, in our free newsletter, because by the time we send it out, it already got published on YouTube, so some of you already are notified. But like I said, I have some housekeeping things I got to talk about. First of all, if you are part of the trader funding program, so you're familiar with the trader funding program, and if you're a trader that's using the GUI Trade or DX Trade platform, that is available on the mobile, for your mobile apps if you're using an Android device. So go to the Google Play Store or whatever your store is. I use Apple, so anyway, so I don't know. I think it's Google Play. Go to the Google Play Store, download the DX Trade or GUI Trade mobile app. That's available to you, so you should know that you can do that. The Apple Store is still in process of being approved, so hopefully that'll be done in the next week or two. Just want to let you know that if you're part of the trader funding program and you want mobile trading, DX Trade, then download it on Google Play. Also, if you guys missed the announcement on the F.A.C.E show yesterday, which was Friday, about the one-on-one coaching, make sure you check it out. All you have to do is click on this link right here, and I'll take you over to our coaching section. We're doing one-on-one mentoring. It's something that I've done for, since the early 2000s. And I've seen so much benefit to some traders that go through this, because not every trader needs to be mentored one-on-one. But the ones that I've mentored over the years have really, it helps them understand concepts. It's hard when you're watching videos and you can't ask a question. Even if you're in a chat room, like our chat rooms that we have in the Forex Analytics chat room, you can type so much, but sometimes just hearing it and being able to say, yeah, what if this, what if that, how about this, how about that? There's a big benefit to doing that. And we do these one-on-one mentorings over GoToWebinar. They're all recorded, so you can go back and reference it, especially when we're talking about different concepts, whether it's Fibonacci's, or you're working with Andre and learning about different harmonic patterns, or maybe you're with Gregor Horvat learning about Elliott waves, or maybe Cayman or Ryan are explaining, how funds, move flows through the market, and, you recorded the video and you're like, oh, geez, I didn't really understand that concept, but you can go back and watch the recording. It's really important. So check out the Trader Coach program. Check out our different mentors. And what I would do is I would go through each individual site, like this one with me, and click on it, watch the little 60-second video about, why you could be coached by me and how that could benefit you. And then if you just scroll down below, you'll notice that there is whoops, I thought I was on my page, but I'm not. If you go on the individual page and you watch that video, you can go down below. You can talk to me. You can actually send me a message. You can actually click here to. You can see my April's already pretty much filled up already. But you can select different dates and times that I have available. And remember, we have a discounted price that's only available till April 10th. So one of the benefits of being first is you can lock in your slot. These slots are obviously first come, first serve. And if you're working with a coach, you're working one-on-one with them. So if you wanted to book a time with Ryan or K-Man or Steve, or any one of our coaches, make sure you do so now before April 10th, which is Wednesday, because that pricing, 50% off your first hour, that will be gone. But we wanted to make it special for you so this way you could take advantage of it, since it is a new offering from the Forex analytics community. Okay, with that being said, I'm going to move on and let's talk about what's happening this next week. So this next week, like I said, it's going to be a big week. We have inflation data, but that's not going to be until later on in the week. The first thing that we're going to be dealing with will really be on Monday. Monday is going to be a fairly slow day, but and I'm going to be coming back to the euro. Don't worry about that. We're going to talk about the Swissy, because finally the dollar Swiss is starting to show some topping near term. I should say topping, more of a consolidation. But Swiss National Bank Jordan, he's going to be speaking at 11:15 a.m. Eastern time. So it's pretty late in the day, obviously late in the evening in Switzerland. But I'm going to show you something. Let's do a little bit of drawing here on the dollar Swiss. I'm going to leave that right there. And notice that how we are stalling at the 78% retracement. So are we theoretically making lower highs and lower lows? Yes, we are. I do expect this dynamic to eventually change. All right, whoops, that didn't stop. Okay, there we go. I expect this dynamic to eventually change. And matter of fact, we're going to take these lines and we're going to recycle them, because I want to show you something. All right, you can see how we have an ascending channel developed. Let me grab this red one. You know what? Let me move that back. Let me grab this other red one and just delete it. And then what we're going to do is we're going to clone this one and then take this and put that up here. And you can see we have this ascending channel right into resistance. Obviously, resistance is key. Now, what I'm going to be looking for, and I'm not sure if we're going to get it, especially not after, I think more of the risk is, since the market's going to be looking for some of his comments to see if we're going to get any more rate cuts, I think the risk is that we actually plow right through this resistance. But what I'm hoping for, and what we should all be hoping for, is we get a pull back towards this channel support. Maybe he's going to be a little bit more, secretive and maybe hide his intentions a little bit more, and perhaps that might allow for another, some Swiss strength. You know what else would allow for some Swiss strength would be just these geopolitical risks that are surfacing all over the globe right now. That in itself could lend the Swiss franc a little bit of support near term. That's why I'm not super anxious right now, today, or maybe even this week. We'll talk about the way I played the Swiss last week, because that was part of the setups at the very end of the video. Remember that? Okay, we'll talk about that. But for right now, I think you got to be a little bit more careful, because the Swiss franc could catch a bid, on any type of risk aversion, especially if the risk aversion is for a specific reason, right? All right. Anyway, that's going to kick us off on Monday. Monday throughout the day. There's, like I said, it's going to be a fairly slow day on Monday. Tuesday, we go into Tuesday and we have Mexican inflation. Now, I want to show you this chart. I brought it specifically for you today. If you look at the Mexican inflation rate, and this is in just, you can see on a month over month basis, it's looking pretty, what's the term everybody's using nowadays? Sticky, right? And when you have a situation where the dollar mex, we were thinking, hey, if it broke back above 1675, that would be a false breakdown. That didn't happen. The dollar mex the Mexican peso continues to be the best performing currency out there, because stocks are strong, and if Mexican inflation continues to be sticky, it's going to be hard for Banxico to join the ranks of other, Latino and I shouldn't say Latino. I should say South African emerging market currencies. It's Saturday morning in the morning for me, guys, so just bear with me. But what I was saying is they might not join the other LATAM central banks in cutting rates. And so as a result, we could see a continued strengthening of the Mexican peso. So watch the Mexican peso. If we start breaking through this 1640 level, the next stop, and you have to start doing things like this. Like if you look at where the 127% extension is, it's around 1610. So there's a lot further downside, especially if we see a strong inflation report on Tuesday. All right, Tuesday night, another big evening, another big night is going to be the Tuesday night. Well, it's actually Wednesday morning in New Zealand. Now, the RBNZ has the rate decision on Wednesday morning, or Tuesday night if you live in the United States, like I do. So what we've seen is the US dollar, or excuse me, the Kiwi cannot and has not been able to get back above 60.40. And that 60.40, that's 0.6040. And let me just take this over and just show you how important this previous support acted as resistance this week. Now, if you use the Forex Analytics platform and you go through our analysis that we do every day here, you'll notice that we have 0.6040. We're bearish while we're below this level. That's what this bias chart means. We do this every day with the Forex Analytics community, and if you can't listen in live, we post the recordings privately for our community. You can see it. The recordings are right here, so you can go back and listen to that any day. But we do this whole bias chart with our traders every single trading day. Now, the reason why that's so important is because every day this last week, we had highlighted the 60.40 level as being an important resistance. 60 has been a pivot, but 60.40 has been a really key development. Now, the reason why I mentioned all of this to you this week is because we do have the RBNZ meeting. That means this 60.40 level needs to continue to hold. The market is expecting that the RBNZ could really lean into a dovish statement. And I believe there's a press conference as well. But more importantly, you just have to be a little bit careful with the Kiwi, just in the event that it is not they don't lean into the dovish expectations so much. If they don't, the Kiwi could squeeze a little bit. And so that's why I think that 60.40 level is going to be 0.6040 is going to be a really important, do or die level for the Kiwi. Now, if we can just stay below there, the risks are for a continuation lower. I mean, the Kiwi just hasn't performed well, even as risk appetite has been so strong. So that's something that, I'll be watching. 60.40 has to hold. As long as that holds, I'll just continue to chip away on the short side on the Kiwi. Now, early Wednesday morning, and if you're, it's Wednesday morning, if you're in Norway, we have Norwegian CPI. Now, the US dollar Norwegian krona has been really interesting, and I'm going to just do a little bit of drawing since this chart has been fairly neglected by us here on the week ahead video crew. And again, you guys know that we update the US dollar Norwegian krona and all these charts 30 different instruments here on Forex Analytics. You can see I'm updating my other set of charts all week long. We're talking about the breakdown of this channel, coming to test the 200 DMA, 50% retracement coming into view, blah, 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 blah. You can read all the analysis that we do all week long while you're here on Forex Analytics. You can read through, all the different analysis, different, Elliott waves to basic technical analysis, all that other stuff. But here on the week ahead video, I use a certain subset of charts that I only use here for this particular video. So obviously we haven't talked about the US dollar Norwegian krona in a couple weeks. Therefore, I need to do a little bit of drawing and catch us up on what's developing here. So first and foremost, you can see this is previous support, current resistance. That's going to be critical. You know why that's also going to be critical? Let me grab a fib and let's do this, because you'll notice that that is a 78% retracement. So we know already the importance of this level. We already know it. All right. I can go ahead and get rid of that because, not that. I'll get rid of that because you already know how important that is. Now, the next thing that's really important is that we're closing in on the 200 DMA and the 50% retracement. You guys all saw that. Okay. Now, the risk here could be near term. Let's do this. The risk could be near term that we do start to find some support somewhere around the 200-day, the 50 DMA. Those are these two averages right here around the 618 retracement. But we have to get past CPI, and with CPI coming out, we already know that in a lot of parts of the world, inflation is fairly sticky. So that's why the CPI data is going to really matter, because people are expecting that the Norges central bank could start to guide the market that they are going to be cutting in June and July, but we have to see the inflation data start to show some continued weakness, because disinflation is prevalent in certain parts of the world. Sticky inflation is prevalent in other parts of the world, right? So it kind of depends on where you're at, and this inconsistency of inflationary pressures around the globe is going to really create volatility in the currency market, because the expectations are going to shift based on where you are, regionally around the world, on whether your central bank is going to be more hawkish or dovish. And that divergence of central bank expectations is what creates ultimately volatility in currencies. So the reason why I explain this is if for some reason, the CPI data comes in, weak, we could see the US dollar Norwegian krona rip right off of here. And then you'll know that 200 DMA and that 50 DMA, you just trade against it, because you know that if you ever break below it, that's where your risk is. Your risk is if it breaks below those levels. But we're going to obviously get more information as the CPI data comes out this week. Speaking of which, on Wednesday, we're going to have US CPI. And the reason why this is going to be so important for us is because the dollar has been very strong. And the dollar index, just so you know, this is the one chart that I do use universally, not only for the Forex analytics platform, but we use it on the F.A.C.E show every day. So if you're watching us here live every morning, and you're listening to our team and what they have to say on the F.A.C.E show, well, you're going to see my dollar index chart every day, because that's the chart I pretty much reference. All right, so right now I'm going to show you just a few things here with the dollar index. We are holding above the 38% retracement of this most recent move. You can see this is the, whoops, I didn't want to do that, but that's okay. It's this move higher, right? We're at the 38% retracement of that move. You can see how we've held, I keep doing that. I didn't mean to do that. You can see this horizontal support right here. That horizontal support continues to hold, and you can see spike lows are being bought. But at the same time, we know that really key resistance resides around 105. If inflation data is strong here in the US, which I suspect it's going to be, because you can see prices aren't really going down. We have a lot of commodity prices that actually are ticking higher. The economy continues to be strong. So when the economy continues to be strong, there's going to be less disinflationary pressures in a situation like that. You're actually going to have more inflationary pressures because of trickle down economics, however you want to look at it. Prices are going to stay pretty sticky. And then you look at energy costs, and then we have potential geopolitical flare-ups, and next thing you know, inflation starts ticking back up 0.2 every month, and the Fed's got themselves in a little bit of a pickle. So the reason why I mention that is because I still think that if the dollar index gets to 105, that's a risk. That's a risk of a potential breakout. So if you're looking at the dollar index chart, I don't know if this CPI print is going to do the trick, but it could. You know, a break above 105 is very bullish. A break below the 200 DMA is bearish. So if you guys are dollar bears and you're just waiting for the dollar to roll over, you might want to wait for it to crack the 200 DMA. Because if it breaks below the 200 DMA, it's breaking below the 50 DMA, it's also breaking below this ascending trend line, then we know we might have some downside open up in the dollar index. But I think if you're trying to short the dollar ahead of that happening, it's going to be a tough battle that you're looking to fight. Okay, continuing on. So we're going to get past the CPI. On Wednesday, we have the Bank of Canada rate decision. Now, this BOC meeting is going to be very important if you're trading the Canadian dollar. I am trading the Canadian dollar. Most of you know, if you're in the Forex analytics community, most of you know I already have some long US dollar, excuse me, let me take that back. Long or short Canadian dollar exposure. I have it through the dollar Canadian, which I am long. Also, I'm long through the Euro Canadian. Most of you know that, and you can see this big inverted head and shoulder pattern that is developing, which most of you that know me really well know I'm not a huge fan of the way this pattern's setting up, but I can tell you this much, that's pretty key resistance, any which way you slice it. Reason why I mention all this is because, and by the way, if you ever want to know what I'm trading, you just come over here into our chat rooms. This is our chat room, right? You go to the trades room and you can go, oh, what does Blake have open as far as positions go? You can read when I'm buying positions, obviously, but you can also see what positions I'm running. So, you know, that's one benefit of being inside of the Forex Analytics chat room, is that you have the ability to, you know, see not only what I'm trading, but what other traders are trading. Don't you think that's beneficial? Well, if you have respect for what I do and how I trade, and you go, well, look, Blake's, you know, long the dollar Canadian and I'm short. That doesn't mean that you should close your short, but maybe you should type to me in the chat room and say, go over here to the general chat room and say, hey, Blake, hey Blake, you know, why are you, oh, you can't see me. You can't see this. You know, why are you shorting the Canadian dollar? You know, and then if you ask something like that and you hit enter, then it's going to get my attention and you can see my response. I can give you a response. You know, again, you know, our trading rooms or our chat rooms aren't necessarily where you should just be mirroring what I'm doing. You should be understanding what I'm doing. It's your prerogative whether you agree or disagree what I'm trading, but even having the ability to talk to not only myself, but other traders, you know, in the community, share ideas, share charts, share, you know, reasons why things are moving up, moving down, you know, having the ability to you know, just communicate with other traders that are looking at the same things that you are, maybe aren't seeing the same things you are, and coming to a consensus of why you should be buying or selling something. Isn't that a benefit? That's right. That's why you should be involved in the Forex Analytics chat room as a result. All right. So with that being said, let's continue on. We do have after the Bank of I was still on the Bank of Canada rate decision. I got on a little tangent there, but with the dollar CAD, if the Canadian, you know, and the Bank of Canada, excuse me, starts to lean in a little bit more, you know, dovish, because you just saw the Canadian, you know, jobs report. We've seen it's going to be kind of tricky this month because the data is not necessarily all bad, but at the same time, if the Bank of Canada is following the lead of the FOMC, perhaps we might start to get, you know, hints of rate cuts coming down the pipe with the dollar Canadian. Next thing you know, the dollar Canadian's trading, you know, well above 136.20. I'll be referencing this chart a little bit later, but this is a really important chart and a really important week if you have Canadian exposure this week. All right, continuing on. The FOMC meeting minutes are going to be, I'm not expecting a lot out of the FOMC meeting minutes because we have had so much, and we're getting even more this week, so much Fed speak this week and last week. It's like what am I going to learn, or what are you going to learn in the FOMC meeting minutes that is different, or that is different from what we just heard, other than we might say, oh, well, Goolsbee said this week, and 2 weeks ago he said this, so he's obviously changed a little bit, but we're getting the real-time comments right now from, obviously every Fed speaker wants to hear themselves speak right now because we're hearing them all. So anyway, with that being said, I don't think the FOMC meeting minutes are going to be that big of a deal. Wednesday night, we do have China, CPI, and producer prices. Do I think it could have an effect on the market? Absolutely. I think it could have effect on the Aussie dollar. And matter of fact, the Aussie dollar, you can see this bear flag pattern. It's not developing, but I'm going to, oops, well, that's fine. We can leave that. Whatever I just deleted, we can delete it. If you look at the Aussie dollar, which I think is going to be a great proxy for the Chinese data that's upcoming. The one thing I have to point out, and I continue to point out with the Aussie dollar, is it's just not acting really well considering where stocks are at, right? And even though we're lacking Australian data this week, we do have Chinese data. So I think that's going to be important because any rally that you see up towards 66.50, probably going to find some good sellers. Now, the flip side to that is we know how important that all of this support is down here. So I guess the point I'm going to try to make with the Aussie dollar is I don't have a lot of I'm not super biased, and you can see it right in the bias chart that we talk about, right? You can see it right here. Aussie dollar, it's got a range bias. Reason why is look at the price action. I mean, be a seller at 66.50, be a buyer at 64.50, 80. Play the range until we have reason to see it trade out of this range. Could the Chinese data be the reason for us to trade out of this range? Maybe. I doubt it, but our eyes should be open anyway. Thursday, we have the ECB decision. Now, this is going to be an important one, and I have to do some work for you on the euro, and let's do it right now together. So if you look at the euro and recent price action, well, let me just tell you this. I really want to sell rallies in euros. So there, I said it. There, it's out there. You guys know it. I'm telling you that right now. I'm still looking to sell, any rally in the euro. But right now, I think the euro is developing some sort of, triangle consolidation type of pattern, right? And you can see it looks just like that. Whether it's more symmetrical long term, whether we do this, and let me just explain it to you in the most simplest of terms, whether we do this first or whether we do this, in my opinion, has more to do with what happens with the ECB this week. Like, just so we all are on the same page here, this upper trend line that you see here, that one, and this lower trend line, in my view, is more symmetrical than this one. So therefore, I believe we can do one of those two things. Now, the reason why we'd get up to 110, in my view, would be because the ECB is just, everybody's on edge whether we're going to get a June cut or not. And I know a lot of ECB followers are like, I don't see how it's even possible that we don't get a cut in June. But if Christine Lagarde and company don't lead us down that path this week, because most people are like, okay, we're going to get a cut in June, but are we going to get one in June and July? Are we going to get them, two back to back? And I think that's what people are expecting this week out of the ECB. But how about if we walk away from this meeting and we're like, shoot, I don't even know if we're going to get a cut in June. Well, that's what's going to put the euro closer to 110. And by the way, I wouldn't mind a move to 110. Why? Let me show you why. Because what would happen here is you'd get some sort of harmonic pattern that would look like this, where you can actually sell into strength like that, right? So whether that happens or not, like I said, it has more to do with what happens on Thursday. I wish I had the palm reading skills or the tarot card reading skills of figuring that out if that's going to happen. But the way I got to look at it is if we break above 109, that should open the door for a higher, a break higher. And there's a reason why that's happening. And it more than likely has to do with some comments that were made from the ECB that were not expected by the market. The flip side is, if we get any rally to 109, are we going to find sellers? I think so, because this is, as you can see right here, we're struggling up at the 618 retracement right now, the 108.88. And if you were trading the Forex, you were using Forex analytics, you were in our community this week, you know that I shorted the euro as we are approaching this 88% retracement. And I shorted it and already closed it out already. But that's how I was playing it. I was playing it up against that level. More than likely, that means that if we break above 108.80, it should open up some upside. All right, moving right along. On Thursday, we have U.S. Oh crap, I forgot. We have U.S. producer prices. So not only do we have the CPI, then we have producer prices right after that the next day. That's why you get that 1-2 punch, right? And the thing you have to be most careful of when you're trading and you're like, oh, the CPI data was super strong, so I got long some dollars, and then next thing you know, producer prices show some weakness and you get whipped around. Or you can get some, doubling up on a move because the producer price is on Thursday. So just remember, it's not just CPI. We do have the follow-up PPI the next day. Also on Thursday, we have a 30-year bond issuance. So there's going to be an auction for the 30-year. I am not clear, and I was looking around. I was trying to find the data. Matter of fact, if you know how much issuance is coming out on Thursday from the Treasury, I didn't have enough time this morning to really start digging into that. Jump in the comments down below and just let us know. I would love to know it. As a matter of fact, if there's something that I missed, jump down in the comments below and tell me if I missed something. I don't catch everything every week. I know there's things that fall through the cracks. I try to do my best for you, and if you like it and you can appreciate that, thumbs up on this video. You can thumbs up. But like I said, I try to catch everything. I can't always, and I do my best for you guys. All right, remember, these are free videos, so leave me a quarter at the in the bathroom on your way out. All right, Friday we have UK GDP. I am going to talk about the sterling quite a bit here in a few minutes, so don't worry about it, because I got stopped out of my short, just so you all know, and I'll talk about that during the trade setup reviews, because there's a little work I want to do on this chart. I do think that the UK GDP data is going to matter. First of all, if you're trading sterling, you're yearning for data, and Friday we have UK GDP. I think that is going to be a mover. Also Friday we have earnings from JP Morgan, Citibank, Wells Fargo, State Street, BlackRock. There's some bank earnings coming out on Friday, so just keep that in mind. The XLF will be what you want to watch going into Friday. Like I mentioned, with bank earnings, you're going to just want to keep a real close eye on what's happening with the XLF. All right. Also on Friday, we have University of Michigan consumer sentiment and inflation expectations data that's coming out. So that's going to wrap up our week as far as data coming out. I want to talk about, obviously, what's happening in some of these other markets. Like, let's start with gold. Gold continues to rip the absolute face-off of shorts. So hopefully you're not short, because this has been in a big breakout. I think every week for the last 2 weeks, we've talked about what a big breakout is. And even though we stalled at the 181 or 161% extension, we just continued to blast higher. Now we are approaching the 161% extension of this big move, right? That is from the, let's see, high of March of 2022 to the low of September 2022. The 161% extension comes in at 23.52. That looks like the next stop. And you know what else happened? Silver happened. It finally broke out above 26 bucks. I was on the trade-off show, the Pepperstone trade-off show, and I can delete this because that obviously did not happen. I was on the Pepperstone trade-off show on Wednesday, and I said, this breakout, now you just want to buy dips to 26 bucks. And on Thursday, Friday, we dipped. We got to 26.20 something, and then we reversed. And that is exactly how you want to play the dollar, the silver market now. Now that the silver market's above 26 bucks, you just buy dips. And you know, while it's above 25.50, I would actually look at it like this, just so you all know. Silver zoomed out, right? And this is not the chart this is not the trend line I'd be looking at. I'll look at a little different trend line. I'd be looking at this one right here. Okay, because you can actually connect this high. Let me just zoom back in for you. You can connect that high and basically that high, and that is even more symmetrical, I think, as far as the triangle goes. So that means that any dip back to this trend line, which right now is at 25.50, right? 25.40, you want to be a buyer on dips on silver like that, if you can get it, you know, because it's going to give you your best risk reward, you know, for being long would be right down there. Now, whether we get it or not is to be seen, but the breakout has happened this week. It finally caught up. I was really worried about silver not catching up. I'm like, gosh, this gold, if it ever tops, silver is going to have a problem. Obviously, that wasn't a problem. Crude. I need to cover crude really quick because crude oil, there are geopolitical risks. Iran is a risk right now. Israel, Iran, and the U.S. being dragged into this conflict, and the rest of the world being dragged into the conflict is a risk, and that's going to be a bigger risk for crude oil. I would not be on the short side of crude. Could it come down? Yeah, I mean, if everybody, you know, kissed and made up tomorrow, crude would probably drop right to 70 bucks and maybe even lower. But right now, that doesn't seem like too much of a possibility. So I'd say technically, while you're above this previous channel right here, it comes in around 85 bucks, you have to be targeting 90, maybe even 95 bucks. That's it. And you know, theoretically, you know, you start looking at moves like this, crude looks like we could trade well over 100 again. I mean, technically speaking. So does that mean that I want to be long crude? No, that's not the way I'm going to be playing. I can play a long crude proxy if I really want to. But I'm just saying, if you're short, you got to be looking at things like that and saying, well, while it's above 85 bucks, that might be the risk. Okay? I do want to talk about stocks really quick, and I'm going to talk about them in greater detail in just a few minutes, but I want to point out just 3 things with you really quick. You see the S&P? S&P hit channel support. How important is this channel support right now? Probably really important. That's the first thing I wanted to show you. Second thing I wanted to show you, Nasdaq is starting to show some signs of weakness. It broke through its channel. Support, 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 right? We're all there? Great, let's move along. Dow broke through channel. Support, right? Support. You guys with me? Support. Oh, we're there. Okay, good. You understand what I'm saying. All right, next, Russell 2000. Oh, that's 4. Sorry, this is the 4th. Russell 2000, another freaking failure. As I've mentioned to you guys last week, I'm like, oh, it's great that we're trying to break out, but do you see this green line? Remember last week? I'm like, watch the green line. It's a 618 retracement. Just as you start to peek your head back over above this resistance, you're going to find yourself right into the 618. That's what the market did, and it backed away. That's not a good sign. It's not a good sign. So anyway, that was number 4. All right, so let's talk, and this is the point I want to go into. What are the reviews from last week? Let's review last week's setups, and then I'm going to give you my 3 best setups for this week. So number 1 on a review, I got stopped out of the dollar, out of the sterling. What? Did somebody just admit that they took a loss? I take losses all the time, guys. That's not uncommon. If you trade the markets, you are going to take losses. I know it's hard for some people to actually accept the fact that you do and will take losses in the market, or I was wrong. I was wrong. And I tried to trade sterling on the short side below 126. And, you know, when it broke that 125.70, remember, that was, my comments were short pound dollar on break below 126 or 125.65, end quote. Well, did we break it? Yeah. Did I get short and get stopped out? Yes. So it turned back around, went back in the channel. But fortunately, I wasn't like super aggressive. But let me show you something. Let me delete that. Let's delete this. And I'm going to stick with this channel, right? If you connect that low right there and this spike low right here and the spike low that we have right there, that might actually be the channel that's being followed. Now, most of you know that when I trade the sterling, there's the propensity that I take my laptop and I chuck it right out the window, which happens to be right next to me right there. Fortunately, I'm on the first floor right now, so it's not much damage is going to happen, but that's the risk. And I'll tell you what, if I get stuck shorting this damn thing one more time and it squeezes me like that, I am probably going to chuck my laptop right outside that window. So anyway, I'm just redrawing this because I think this is the way we have to be looking at it. Okay. Notice how we had the false breakdown below the 200 DMA, but I should have looked back and said, you know what, that's not uncommon for sterling. We get these false breakdowns below the 200 DMA. It's getting the sustained break of it. So anyway, just long story short, that one didn't work out for me. Still on my radar. And yes, I do want a revenge trade. No, I haven't done it yet, but I do. I feel that desire to be just wanted to short it just in spite of wanting to be short. And I want to be right with the sterling, but I haven't done it yet. But that's how I feel. That is how I feel. All right, next trade. So number one didn't work out so well. Euro Swiss, get long on dip. It went right to channel support. I bought the Euro Swiss and I got out before it hit highs. So that one worked out like a beauty. It was perfect, just so you all know. And it worked out that way. Now, the thing is, I like I mentioned, I am a little worried about Swiss franc right now. And I think that it geopolitical risk. You saw the reversal actually on Thursday and Friday in the Swiss franc. Be a little careful with that. All right, so number two worked perfect. Number three, short Aussie New Zealand stops above 109.60. I am short Aussie New Zealand. I am out of the money. But guess what it has done? Let's go over to, where is it? Oh, I think it's at the bottom here. It is. But you can see we're stalling right on that trend line. Now the flip side is, if you look at this and you're like, okay, well, we're holding where it needs to hold. I mean, I'm short and I'm down like 28 pips or something like that. I don't know. I'm not looking at my account right now, but I'm down a little bit in this. The good news is if it starts breaking above that 109.60, because that, I quote, short Aussie New Zealand, because I have it written down, stopped from last week. Short Aussie New Zealand stops above 109.60-ish. What was the high of last week? 106-ish, right? The high of last week was, according to this data feed, 109.55. So you can see it right up here, right? It's 109.55, which is 109.60-ish. So we start getting a sustained break above 109.60. Well, then we have a serious breakout. Can that happen this week? Absolutely. Why? RBNZ meets this week. How about if they're super dovish? This Aussie Kiwi can scream higher, especially if Chinese inflation data is strong. Yeah, the Aussie Kiwi could scream higher. So just be careful. I'm going to call this one still in it, so we're just kind of flat. 1-1, lost 1, 1 flat. Okay, here's the three setups for this week. First one. You already heard me talk about it, so I'm going to tell you this right now. I'm going to sell euro dollar on any rally to 110. That's it. Plain and simple. I'm going to make it really easy for you. Now, the question will be, will we be able to make it to 110? Because I think the 110-107 range is the range that's in play right now. There's 107. There's 110. That's the range, and I want to short into any rally. I want to short into any rally. That means any rally up here, I do want to be on the short side. Question is, are we going to be able to get up there? I don't know. That's questionable to me right now. But if we see it, 110, I'm going to be short. Next setup, Dollar CAD, breakout of 136.20 daily close. So you want a daily close above 136.20. So that means we close right here. Then you want to be on the long side. That's setup number 2. Setup number 3. I know this is a big one. Nasdaq100. If we get a daily close below 17,750, I think you have to pray on the week. I think the Nasdaq has spent literally the last month consolidating. So if it starts to roll over and we start getting a daily close below that green horizontal trend line, that is going to be a setup going into next week. All right, guys. Hey, look, if you haven't tried out Forex Analytics, it's only $1 for 10 days. Try it out. Jump in the chat room with us. Come chat with me. If you haven't checked out the personal coaching, the one-on-one mentoring, check that out. It's brand new. And remember, you have literally just a couple of days. As you can see, again, in my calendar, my April only has 2 hours left, right? So those are going because, the prices are going to go up on Wednesday. So don't just look at my sessions, look at everybody else's and take advantage of their availability as well. Also, if you haven't checked out the trader funding program and you want to get involved with our community, this is one of the easiest ways, because if you just don't have the capital to trade, if you don't have like a $50,000 account or a $100,000 account or $1 million account, you want to learn how to access that type of capital, well, check out the trader funding program. And by doing that, you'll automatically be involved in the Forex Analytics community as well, because we want you to succeed. So we want you to be in our community and be able to have access to our team, myself, while you're going through the trader funding program. Anyway, with all that being said, next week's going to be a busy week. I look forward to seeing you on Monday morning on the F.A.C.E show. I hope you have a great remainder of your week, and I want to thank you so much for spending your time with me. Make sure you give our team a thumbs up for the video if you enjoyed it. Subscribe to the channel. I'll see you guys on Monday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.